All right, everybody, I'm going to kick us off here. Thanks so much for your time. Appreciate everybody joining us today. Um, so got myself, Ted Hill, CIO here at Catalyst, AJ Klenk, founding partner of Catalyst, and John Bell, who's regional development partner here as well. Just a real quick backdrop. My role here at Catalyst is kind of all things capital related. So if you're an existing investor of ours, we've probably interacted a good bit. So I kind of run our syndication platform with retail investors. And I'll turn it over to AJ to let him introduce himself, and then he'll pass it to John.
Good afternoon, everyone. Appreciate you carving out a little bit of time. AJ Klenk, one of the founders at Catalyst, based in Charlotte. Career in multifamily, really from graduating at the University of Michigan. Initially founded what became the country's largest privately owned apartment brokerage, and then parlayed that into Catalyst. And yeah, really excited to be here. This project's pretty dear to me, with a lot of history. So pass it on to John.
Hello, everybody. As AJ said, thank you for joining us today. Greatly appreciated. My name is John Bell, Regional Development Partner with Catalyst. Have been in the business for over 25 years doing dirt to keys development with in apartments, leading several different groups in the Southeast. Thrilled to be working with Catalyst. Out of my career, I would say that in many ways, this is the most unique project I've ever done. Not necessarily because of just Archer, but with the compilation of all three projects together and what we've created here. So excited to introduce y'all to the project, and I'll turn it back over.
Yeah, great. Well, thanks, guys. Yeah, to that end, so we're going to cover a few things today. One, obviously, we'll talk about the Archer project in particular, including the investment offering, the timeline, the projected returns, et cetera. But really, what we also want to do is spend a good bit of time on the backdrop of this master plan community. It's a three-phased master plan project that AJ has been working on since 2019. Actually, maybe even earlier than that. So it's been a long time in the making. As John mentioned, it's truly special with just some of the amenities and things that we have on site that are just not found in Asheville anywhere, and very rarely found just in general. We're going to talk a little bit about the broader Asheville market too, and then at the end we'll do a Q&A, so you'll be able to drop questions into the chat. So with that said, I'm going to share my screen and let AJ talk a little bit about Catalyst, who we are, and just give a little bit of backdrop about our company. So AJ, I'll let you take it away if you would.
Yeah, and just a heads up, we're going to try to keep this to 30 minutes. I know everybody's got a lot on their schedule and very valuable time. So just a heads up there. So yeah, Catalyst, as I mentioned, founded beginning in 2019. Got, I'd say 13, 14 projects underway now at this point. One of the big goals for Catalyst is to build institutional quality product, institutional level service, and from bottom to top. So when you see somebody like John with the pedigree that he has, and Ted and his experience on the capital side, yeah, I've been around this business my entire career, and in investment sales, having an opportunity to meet the who's who of multifamily. I feel very confident that we have an absolute A-plus team and A-plus individuals. We focus on conventional build to rent, active adult, and lot development, and have expertise in each one of those residential verticals. Geographically, we're focused on Charlotte, Raleigh, major markets similar to those in the Southeast. So coverage over North Carolina, South Carolina, Georgia, Tennessee, and Florida. And yeah, philanthropy is also a big part of what we do. Every project that we launch, we donate $50,000 to build a school in a remote third world community that doesn't have a school, through a nonprofit I'm on the board of, called Build On. So just a fun feature here, something to look at going forward. So stepping into the next section here, just a quick overview of Asheville in general as a market and why Asheville. So many of you I've probably been to Asheville, heard of Asheville. From a multifamily investment standpoint, as a investment sales broker in my career, I was always initially surprised and curious why anytime we marketed or a property was marketed in Asheville on the apartment side, it got the same amount of interest, same number of buyers, if not more, and the same or lower cap rate than projects that were located in significantly larger markets like Charlotte or Raleigh or Nashville. And it just sort of puzzled me for a while, and dug in. And the reality of the situation is it's one of the highest barrier to entry markets in the Southeast, if not the highest barrier to entry market. You've got geographical constraints, topography constraints, obviously, a lot of rock, and a lot of NIMBYism, if you will, which, all of those ingredients together make it a tough place to get through the entitlement process. So, after launching Catalyst, one of the first targets, this was the very first property that we identified, was Asheville for all of those reasons. And come to find out, you treat people right in the community and do what you say you're going to do, especially to the brokerage community, then you can get turned on to some great opportunities. And so we've been fortunate to make some really terrific friends in Asheville. And this is a project that I came across in, I think, December of 2018, and we've been working on it ever since. So it's located right in West Asheville, which is probably a 7-minute drive to downtown Asheville. It has its own character that's unique. It's similar in a lot of ways to Plaza Midwood in Charlotte, or Noda, but it's even more so of a art enclave community there. So we'll roll from that Asheville overview on more specifically to RiverBlue. So as mentioned, found the property into 2018, was immediately taken aback by the beauty of the property. It was 55 acres. It is 55 acres in total. Was available for sale essentially through the church that's located on the front of the property, off of our property. And come to find out, the church bought this property from Billy Graham's son some 30 years ago, and had a great story about standing out in the field and having a vision, and a really cool backdrop to what's now come to be an incredible property. But the pastor next door was very interested in building or having a multi-generational mixed-use community surrounding or behind his church. And the Crossroads Church in West Asheville is the oldest church in West Asheville. It's a non-denominational church. They're terrific people and great neighbors, and we've done a lot for them and with them for hurricane relief, and they've really welcomed us into the community. But they were looking for a steward of this property. It was 55 acres. It's got a mile of river frontage, roughly. It's on the future Greenway trail plan for Asheville. So as of now, we're the largest developer of Greenway in Asheville, outside of the city of Asheville. We went through and built a mile-long Greenway along the Hominy River. So kind of like, John alluded to, I've looked at apartment properties my entire life. I have not seen anything anywhere close to this, from the standpoint that you do have, western facing mountain views. You can sit out at the pool and watch the sunset. You've got, again, a mile of Greenway that will connect to the larger Asheville Greenway system. So, imagine jumping on your bike or your electric bike in the morning, and in 10 minutes you're right downtown, kind of going through the woods, if you will. We've got ability to have a kayak launch, pickleball courts, more dog parks than you can count. The Greenway in and of itself is about 100 to 300 foot wide piece of grass along the river that just serves as a terrific place to let your dogs out and let your dog run wild, which, we've got a ton of dogs at this property, a ton of active adults already at Hominy and our second phase chorus. And then we also built a disc golf course, sort of wrapping the Greenway designed by a professional disc golf player that we've gotten to know there in the Asheville community. So very high barrier to entry market. We've fully entitled and rough graded the site. So this is the third of 3 phases at RiverBlue. The first phase being Hominy at RiverBlue, which is a conventional project. It's about 40% pre-leased, I believe.
42.
42%.
It's getting higher all the time, faster than we can count.
Yeah. So, but great property. I think what's great at this point is to see how it is competing in the market. So the velocity that we've had, the number of leases that we've signed per month, our reputation scores, the highest Greystar claims they've seen. And then also the rents that we're able to achieve are right there at the highest level in Asheville, if not the highest, depending on floor plans, while a couple competitors that we trade traffic with have a slightly nicer finish level. They have conditioned corridors, they have concrete balconies, so you don't have water dripping through to the next unit below you. And I think what I'm trying to illustrate is that the residents of Hominy and frankly tenants in Asheville, like the word is out about RiverBlue. You can hike for 2.5 miles without leaving the property. You can let your dog out, and it's just a terrific communal setting. And that's what folks come to Asheville for. So we are definitely getting a bump because of our location and our natural amenities, which nobody can compare with. Our second phase, which is still under construction, is called Chorus Asheville. All these have websites if you want to check them out online and kind of tool around on there. It's an active adult community. It's the first active adult community in Asheville. Active adult is a segment of residential rental housing that's become really popular in the last few years. Typically, it demands premiums over conventional, anywhere from $350 to $600 per unit. Obviously, you have to be 55 years or older. And this project is already close to 40%, 35 or so percent pre-leased. It's actually been the top performer for Greystar, who manages the property in the entire country out of their lease ups over the last few
They're
years.
also the largest management company in the nation.
Yep. So Greystar is the gold standard when it comes, or really when it comes to property management in general, but specifically active adult. So again, I think it's just another great illustration of the thoughtfulness that John's put into designing this project, this master plan, and then what makes it so unique. Sitting here, surrounded by a river. A couple other things real quick to hit on. See, 25 acres of green space. I think I mentioned the Greenway and the frontage. Within Archer, something to note, there will be an integrated coffee shop, cafe, bodega. So imagine walking in the front door of your leasing center, which is what would typically be a leasing center, and you walk straight in and you're met by a barista who's offering you a warm drink, and then the leasing agent's off to the right. And so this is a concept that's been executed really, really well at a number of Greystar properties, and they all always seem to claim that it's the #1 amenity, and it absolutely has helped with retention and renewals, and just activation of tenants in that common space. It obviously also adds revenue to the property. I happen to be the primary investor and own a hospitality company called Built on Hospitality that is based in Charlotte, and we'll be operating this. So, we've essentially modeled this after the existing concepts that are out there, but with my chef he's beat Bobby Flay and he's won Chopped a few times, and my GM's had similar accolades around the country, or the CEO rather. Yeah, we feel really excited about executing this vision here and having something that is totally bespoke, where you could sit at the pool and order your healthy, bowl for lunch, or salad with protein, or smoothie. We'll have
or a burger and fries. Just
or
kidding.
a burger and fries. So yeah, a couple last points. The property itself sits right over the Hominy River from the city, and so we benefit from significant benefits being in the county, in Buncombe County, where our affordable housing requirement was only 5% of the total units versus 20%, and our property taxes are roughly 40% lower than if we were right over the river in the city limits. Um, so yeah, I think that probably hits enough for just an overview of the property, Asheville, or RiverBlue in Asheville, and I'll pass it on to John. John, if you want to dig in a little bit more on Archer specifically, that'd be terrific.
Yep. And Ted, if you don't mind going back to the last slide that shows the
Master
where we
plan.
sit, no, the site taxes, the taxes and affordable
Oh,
component. I wanted to touch on something.
yeah, right here.
So everybody, the importance of this is that oftentimes what you want to do as a developer is go in locations that don't have a lot of competition. And what's important about this slide and the two comments that AJ touched on are that in our location, a lot of what we compete against are properties that are in the city of Asheville. We just happen, as AJ said, sit right on up on the city limit, and so we compete against properties that are in the city. But the benefit that we have is with competition. So for us to have new competition, they really are going to have a hard time providing new supply because they're hit with a lot of with providing affordable housing, with paying higher taxes. Therefore, it's harder to make the deal underwrite. And therefore, there just is not as much supply that's going to be happening in the city of Asheville. So the benefit for us is that we don't have any of those issues, and we are right at the city limit competing with everybody. So I just wanted to touch on that for a minute. And then Ted, if you don't mind jumping over to the other screen, that'd be great.
Start here.
So yeah, that's great. So I'll talk a little bit about the project itself and jump into a few of the details. I won't go too deep. If you have any questions, happy to address those at the end. So Archer at RiverBlue is the third and last parcel to be developed within RiverBlue. As AJ said, RiverBlue was conceptualized from day one as this overall community that's intergenerational, that offers exceedingly unique outside amenities. And to have all of that come together, the project really has to act as one, and it builds off of each other. It gives a synergy that is not available if it's just a one-off deal. So Archer is going to be the heart of the community, in part because of the Upland Social programming that we've done. That sits right at the hub of all three properties, kind of at the nexus, if you will. So Archer itself, the residents there will benefit from, at the far corner of the property, being having the hub of the property, having the restaurant, having all of the amenities, but where they're located is along the river, so that they have views out to the river. It's a quieter, more refined setting than let's say Hominy, which is right at the front of the property and is up against the interstate. So this site is reserved. It's the heart of the property, and it sits back with these great views of the river. The project itself is 245 units. We've designed it to have a feel of a more refined, higher end property than, say, Hominy. Hominy is for folks who are kind of in that 25 to 35, 36, 37 year age group. Archer is going to be a slightly different demographic, a little bit older, a little bit more refined. We've created that setting by having a different color palette, having a different feel, having different layouts, having the floor plan slightly larger. So this is it'll be a resident, it'll be a young attorney, it'll be engineers. So that's who we've programmed. This will be best-in-class features. So as AJ mentioned earlier, Hominy competes at a rent level that is equal to any and higher in some cases than any property in Metro Asheville. And that is because while the Hominy is doesn't have all the refinements of some of the other properties, there's a great benefit in Hominy having all of RiverBlue and what RiverBlue is about. Archer is a little bit different in that the finishes, the amenity, the styling are as good as any property in the city. And we have all of RiverBlue on top of that. And so there is no reason this is not going to be the highest rents in the city. So again, what we've done is we've done these refinements. They're slightly larger than Hominy. The color palette's different. You can see some of the design differences here. Over on the right, this is Hominy. Straight up white cabinets, white countertops, just a good clean look. And it is going to be more attractive to that 25 to 35-year-old. Over on the left side, you've got Archer, and you can see we've got a different color palette. It just feels different. That doesn't mean it costs any more money. We just took a little bit more time in selecting the appropriate finishes to meet our targeted audience. So going back to the Ted, if you want, we could talk a little bit about the clubhouse, because I think that's pretty unique. So this shows the clubhouse itself. This is part of the heart of the community. It is a very large clubhouse for 245 units. I would argue that there are almost no communities that are conventional communities of 250 units that have a 10,000 plus square foot clubhouse. We have done it for a particular reason because we want it to be the hub of the community. We want people to be coming here. We also have the Upland Social component, and we also have a co-work space just to the left of the Upland Social area. So there are a couple of, that is very unique, and that is what has caused this clubhouse to expand a little bit. But it's important to the programming of the project. We'll have quartz countertops, extra tall cabinets, wall cabinets, glass shower doors, all the smart home technology that you could ask for. Each of the buildings here are going to be controlled access, so you can't get into any of these buildings unless you live in that building. Saltwater pools, pet spa, and co-working space, all the goodies one could ever ask for.
And hey, John, sorry, let me just throw in one more thing too. So just to clarify, so the whole concept of Upland Social kind of happens here. If you're an Archer resident, there's certain there's certain sections in this clubhouse that you'll be able to access that not everybody will. So for example, the fitness area, the pool area, the club room, those are specific to Archer residents. They'll be key card accessed. But the cafe is meant to be accessed by not just Archer, but Hominy and Chorus, the first two phases as well. So I think to John's point, this is kind of becomes the nexus of the community. And this is sort of where they all kind of converge is in this cafe area. So.
Yes, correct. Thank you for that clarification. The other thing that I'd add is that having this type of amenity on the site will benefit not only Archer, but all of RiverBlue, but it really causes a sticky resident that as people get together, as they start to know each other and they see each other's faces and they form friendships, that is the number one reason that people stay at a property, that and good management. But if you can get people to want to stay at the property because their friends are there, because they're comfortable there, because things become a habit. I'm walking down, I'm getting my coffee, I'm walking along the river in the morning with my dog. If you do that as a routine, you do not want to leave. And if you do not want to leave, it gives us the opportunity to push rents. And that is one of the great benefits of this clubhouse and what we've created with Upland Social, with this being the nexus of the community, as well as just the overall RiverBlue setting and amenities. And I do not think that that can be stressed enough, that is going to cause a stickiness of residents, which allow us to push rents. We did talk about Upland Social for a bit. I always like pointing this out. This is the first time I've ever heard AJ mention it. He is very humble. But the fact that the head chef who will be curating the food here has been on Bobby Flay on the Food Network, has beat Bobby Flay, has been on the show Chopped twice and won. And then in addition, the general manager that AJ has will be overseeing this as well. Has been a head manager for the Ritz-Carlton hotels and opening up a lot of them, revamping the Marriott hotel menus worldwide. So as quality a group as we could get on this. So probably touched on this enough. I think what's important is also to talk about some of the differences in Hominy, which is adjacent to Archer. And that also will lead into some of the discussion about comps as well. Ted, if you don't mind jumping over to the Hominy Archer comparison.
Yeah.
So let me touch on why this is important. So as AJ mentioned earlier, Hominy, which is the phase that's fully constructed and is in lease up right now, has rents that are at the top of the market. In some cases, with some of the floor plans, we are the top rent in the market. And in others, we're number 1, 2, or 3, kind of right in there. And that is despite the fact that as an asset, just the finish levels, just the building type, we are, I want to be careful about how I phrase this because I don't want it to come out wrong, but the finishes are similar to anything in the market, but there are some differences. And despite all of that, we're still top of the market product. Archer is what takes us kind of to the very top of the market. And I think that it's important to point out some of the differences between Archer and Hominy so that this becomes really clear. So one thing that I would say is the balconies. So at Hominy, we've got wood balconies. You sit out there, you put your table there, you put your chairs there, and they kind of rock because of the little lines between the seams between the wood. If you're sitting below a balcony, the water drips through. Whereas at Hominy, we've got concrete balconies. Everything is solid. You don't get rained on. It's a much different feel. I would also say that just aesthetically, there's a difference. You can see here where we've got the underside of the balcony. So if I'm at Hominy and I look up, I'm going to see what you see at the bottom of the bottom left of the screen here. I'm going to look up, I'm going to see the framing, I'm going to see the floorboards up above. Whereas if I'm at Archer and I look up, I see a nice clean ceiling. Those are little touches, but they just help. They create the setting, they help create the feel. The other thing is that with Hominy, they're open corridors. There's no controlled access. Anyone can drive up and walk up to any unit. You don't have to be a resident. All of the other, whereas at Archer, we've got controlled access. So no one can get inside of that building unless they live in that building. So if I'm an Archer resident, I cannot go to one of the adjacent buildings and get in, even though I've got an access key. It can only be my building. And that's pretty unique. Additionally, what Archer has is interior conditioned corridors. So if you look at the bottom right of the screen, that's what you've got at Hominy. Concrete floors, you look straight out, you know, the wind blows through there during the winter, during the summertime. It's a very different feel, and the doors are a little bit more plain, as you see at the very bottom right photo. If you go just above that, the feel is very different at Archer. It's much more refined. It's much more comfortable. It's an elevated feel, conditioned corridors. You don't have wind blowing through there. It's lit nicely all through the year. It's carpeted. It's quiet. It helps create more of a community and setting when you walk out and you can comfortably talk to your neighbors. Ted, I think that, were there any other slides to touch on the comparison?
Yeah, I think we're good. I think we're good on the
Okay.
comparison. Yeah.
All right. All
John,
right.
could you touch on Herman and
Yes.
yeah, just kind of the timing?
Yeah. Yeah. So, so this project, we've got a contractor, C. Herman Construction, who's priced this out. They've got a full bid set of plans. They've priced it out fully in the market. We actually have come in slightly below budget, which is great. Chris Herman is a contractor out of Charlotte. He happens to be the largest residential contractor in Metro Asheville. He has built several projects in the past. He currently is doing our active adult project directly next to Archer. He is also doing our other project, Fairview, that is in downtown Asheville, in an area called Biltmore Village. We have gotten to be and then we also are working with a group called BB&M Architecture. They're doing the Fairview design. They're also doing Archer design. CDC is our civil engineer for all of the projects. And then the reason that this is important is that with a set of plans that's hundreds of pages with tiny little details all throughout the page, it is very important for the contractor and the architect and the civil engineer to understand just implicitly what the other guy is thinking, so that when you go build it, you don't have questions, or when you price it out, you know exactly what they were thinking, so that you don't have these gaps in the plan. So one thing, this is a team that is proven to us. It's done very well for us, and it's repetitive. So we've worked out a lot of kinks. The other thing that is very important is making sure that our pricing is correct and we don't have gaps in our scope or something's missed. So Chris Herman is a contractor who we've grown very comfortable with. He knows the Asheville market very well, has a good subcontractor base here. And our experience with him is this. So for Chorus, he priced out Chorus when we were 50% through plans, at 50%. He held that price all the way to the contract. So there were no changes. We're going to finish up the project in another 2 months. He's done with Chorus. And the only change orders that we have received are because of just certain outside things, like we hit some bad dirt and we had to dig that out. We had plenty of contingency. We have contingency left over just to allay any questions there. But he has been a seamless contractor there. At Fairview, our other project, when the plans were at 20% complete, he gave us a price for what it would be. He is a year into constructing the project and he has held his budget. There have been some escalations because of some of the dirt and some of those things, but otherwise, or some things that we added to the plans, but otherwise he has held that price. Likewise, we have him on Archer for all of those reasons. So we feel very good about our project team and our contractor.
Cool.
So let me touch base very quickly on the timing. So the plan is that we're going to close this deal in November. So we'll have all the equity in the door. We'll close our construction contract and we'll start construction. Just call it December 1. It'll take approximately 18 months to deliver the first units. That'll put us into the spring. And that is a perfect time to start leasing units. That is when people are moving about. We'll have our management team on the site early doing pre-leasing. So the timing is ideal for this. And then the other thing that I'd touch on is the site. So our site contractor has been the site contractor for all of RiverBlue, all 3 sites. They did the early mass grading. We've got a great relationship with them. And they're the site work contractor here. It happens that Chris Herman is the contractor for the adjacent site. So we've got a team that really knows the site, really knows the inspectors, can move from one side of the property line to the other seamlessly. And so all the way along, what Catalyst has worked to do is mitigate risk through construction, through design, through planning. And so Archer is the final parcel to deliver at RiverBlue. And I think through all of the various exercises that we have done in planning, we have kind of worked out any kinks that we might have along the way. And so feel very confident on the design, feel very confident on being able to target the right resident base, and that we have the right design and construction team to execute this.
Excellent. Thanks, John.
Mm-hmm.
Hey, Ted, I just want to jump in on just two things real quick. That was great summary, John. One thing that wasn't mentioned is that Greystar will manage all three properties, and there are, of course, a lot of operational efficiencies and other synergies when you're allowed to have the same management company handle 660 total units. No infighting when it comes to leads, and a lot of cross sharing of leads. As well as an ability for us to reduce the amount of payroll that we have at RiverBlue in general through a couple shared salary positions, also shared marketing expenses. That is not, those economics are economics we did not underwrite, meaning you don't see the benefit of those in the pro formas that we've shared and the return expectations that we have. But we're already seeing the benefit of that, having two projects in lease up. And then also something that's near and dear to me is marketing and branding. And RiverBlue, specifically that name, RiverBlue, is something that we are really pushing around Asheville. And if not already, it will become a household name in the Asheville community, if not further from there. Being very intentional about the trail signage and the signage to the fire pits or the hammock lawn and the pickleball courts and trail maps. And just imagine going to one of your favorite mountain resorts and getting a trail map when you check in to Grove Park or Primland, if anybody's been to those. And that's sort of what we're driving at here. And the last thing that I didn't mention was a massive event lawn, a turf lawn and grass lawn that we have adjacent to the Archer clubhouse and Upland Social. So from food truck Fridays to movies on the lawn to community-wide yoga events, art expositions and things like that. So just want to note those few things that I think make the project a little bit more unique.
There's one other thing that I'd add, which is a lifestyle coordinator. So at Chorus, similar to many active adult communities, you have what's called lifestyle coordinator. And one of the benefits of residents in an active adult community is that you tend to have someone who focuses exclusively on bringing people together, making connections and building those friendships, which again causes stickiness of residents, allows you to push your rents. We've got a lifestyle coordinator program for our Chorus Active Adult project, but that person is also going to be coordinating events and lifestyle programming for all three communities. As AJ said, that's not built into any of the budgets. It's standalone to Chorus. We are trying to be conservative with our estimating here, which is why we don't show that we think we can push rents for that, which also is why each project is programmed or pro forma as a standalone community. But there will be a lot of shared savings when we get into the project.
Cool. Thank you guys very much. That's great. AJ and John did the fun part, so I'll be the geeky math guy. So I'll talk specifically about the actual investment offering here and the way the capital structure is made up. So as you can see on the screen right now, total project cost is $71.5 million. The elements of that are as follows. So the first position construction loan is going to be done so by way of a bank called Trustmark. We are in active loan negotiations right now, so we're passing loan documents back and forth. The preferred equity piece will be a partnership with a group called Blue Rock. This will be our fourth project with them. We did our signed our first deal with him back in 2018, and we've had just a tremendous partnership with them ever since. We think very highly of them. Frankly, we've been in situations where things did not go according to plan, and they were just a phenomenal partner. So really excited about locking arms with them again on this deal. So what's being offered today is the common equity component of this, which is the last segment of the capital stack. And one of the things I just want to point out here is that the common equity waterfall that we're offering is, I guess, twofold. One is it's the simplest that we've ever offered, and it's the highest rate of preferred return that we've ever offered. Generally, this first tier of preferred return ends up being in the 8 to 9% range. We're offering 12 here, which frankly just puts more risk on Catalyst's side to go perform, not just to hit the numbers, but to do so in a timely fashion. So we're, in our minds, we're kind of putting our money where our mouth is in that regard. And then after the 12% return is achieved, then it's simply a 50-50 split to all the LP investors and Catalyst. So to say it differently, Catalyst doesn't make any money until everybody has gotten their money back plus a 12% annual return. Yeah, and as John mentioned to you, just in regard to the overall time frame, it's right at about a 3-year hold period. So we're aiming to close this in mid-November. And that's, as John mentioned, that's going to put us delivering units in an ideal time. And that puts us right about a 3-year from, day of closing to some sort of exit. If we've spoken before, we've probably talked briefly, and I'm going to keep this, I'll keep this really short, but one of the things as a developer that I think sets us apart is there's a lot of what's called merchant build developers that just build projects and sell them. There's nothing wrong with that strategy, and we do that from time to time. But one of the things we also do is we do hold a number of our assets longer term. We've executed that strategy before, something we believe in. This site in particular is definitely one of those instances where we believe in the real estate. There's the site itself is unique. It's really irreplaceable. We believe in the Asheville market longer term. So this is most likely for us a candidate to be a long-term hold. So what's offered here is simply a development cycle. So what we're asking for is effectively a 3-year development or a 3-year capitalization. At the end of that cycle, what we would do is get the property valued by a broker. And then we would take that valuation. We would determine if we want to just sell the asset in the open market, which likely we would not do. But at that point, what we would do is come back to the investor base and give them the option to continue to hold it. So it'd be a whole second life of the asset. You could do that or you could not do that. You would also have the option to cash out your investment at that point based on the third-party valuation that we get. So we try and just really create the maximum amount of optionality within the investor base. One of the things that we've seen people really like about that ability to essentially kind of recapitalize and hold the asset is that there's generally not a tax event at that point. So you're not experiencing a gain. You kind of get the benefit of the value lift, but without having to pay the taxes at that point. So anyway, that's the investment offering in a nutshell. If you want to learn more about it, I'm happy to do a one-on-one call. If you do decide to proceed, it's a pretty seamless onboarding process. We have a electronic signature package, so everything's done just basically via Juniper Square and DocuSign. It's pretty simplistic and pretty streamlined. If you're not already an investor, once you become one, we get into a quarterly reporting cycle. And we're pretty proud of our reporting. We put together a comprehensive quarterly report that speaks to the development budget, the development timeline. We give you pictures of the construction activity and the progress that's been made. And then once we get into the leasing, of course, we'll talk about leasing statistics, tours, occupancy, whether or not we're hitting the pro forma rents, velocity, et cetera. So again, happy to dive into that one-on-one if anybody would like. And I know we're right at our 45 minutes right here, but feel free to drop a question in the chat if you want into the Q&A section. But one of the things I did want to cover that does oftentimes come up as I speak to folks is investing by way of a trust or an IRA or an LLC. So just wanted to let everybody know that we can handle all of those different type of investment vehicles. We have a number of our investors that are invested with us by way of IRAs and trusts, LLCs. We have people that are here personally. So we can typically accommodate, anyone into those structures if that's your desired path. So I think that's all I have for today. Again, trying to kind of keep under this 45-minute window. John, AJ, anything you have in closing? I don't see any questions in the chat, but feel free to drop those in, and I'll give AJ and John the floor for one last comment if they wish.
Nothing here. I think you covered it from my
No,
perspective.
nothing big. I would just say, more broadly speaking, this is what we do all day. We focus on commercial real estate investing, and we think we're pretty darn good at it based on our experiences. And we want to be a resource to you. We want to be a partner to you. We want to help you build wealth through commercial real estate investing. So, whether it's this project or you have, certain goals over the next few years, capital events, or just curious and want to learn more, please don't hesitate to reach out. That's sincerely what we're here for. And that's our job. So we're very approachable. We don't have big egos, and here to help. So feel free to reach out to John, Ted, or I, and appreciate everybody's time today.
Hey, one question that just popped up. I'll just address it really quick while we're on the line. So somebody asked about how SOFR is set. The answer is that it will float continuously throughout the cycle of it. So essentially, whatever the SOFR rate is, that's how the monthly interest amount will be calculated. It is projected to float down over the life cycle of the asset. So essentially, it's just the SOFR rate plus a rate of 2.75 is the bank spread. So that essentially floats throughout the entire time that the loan is active, so to speak. The acreage of Archer is roughly 24 acres. Another question I saw here. It's 24 of the 55, so there's a disproportionate amount of the kind of common space that actually sits on this Archer land. There is an REA in place that essentially manages the common elements like the walking trails, the Frisbee golf course, pickleball, the kayak launch. So each of the three phases contribute into that, similar to an HOA. It's on a per unit basis, and those funds go into to maintaining those shared elements. So I hope all that makes sense.
And yes, we'll send out a copy of the presentation,
Of course,
for everybody to share.
Yeah, it's being recorded, so we'll absolutely provide it. So anyway, thanks everybody. We appreciate your time as always. Feel free to reach out to us if you have questions. And as always, thanks for your time.
Thank you, everybody.
Take care. See ya.
Have a great week.
Bye.
Bye-bye.